deploy debts in our management of the economy, it is also important that we put a finger on it, okay, so that things will not go out of hand. Inflation is going down, yes, it's true, but it can be better. So we can still obtain an optimal level, and that's the essence of this stability that the finance minister wants us to believe. And the exchange rate stability also comes with it. There is no point if your inflation is low and your exchange rate is high. Definitely, there's going to be an issue. Medium-term debt strategy would also be captured on this. And he talks also about accelerating economic transformation and job creation. Okay, job creation is a big issue in this country. And if you want to be a government who want to enjoy being shown the red card, as we speak in political terms, then be playing with job creation. Okay, so as part of the acceleration of the economy, more modernization of our education, health, as well as retooling our security forces, very, very important. And the extension of social amenities like electricity, water, and sanitation would also fall under this trench. Strengthening security and social sector for inclusive growth. It's important that we don't leave our energy sector in terms of financing and restructuring out of this, and how we can commercialize agriculture and aquaculture and agribusiness. So agriculture is not only about providing implements and also providing planting seeds. No, it is also looking at the business aspect of it, how it will reach the masses, and how the farmer could also have something to look after himself and also the family. It's very important. So those are the three thematic areas that will drive strategy in the 2026 budget. Now, if you look at our budgets as presented, I would dare to say that COVID and related VAT issues is the main menu on the agenda. Okay, and this has been presented in these quadrants. The first is to abolish the GETS fund, NHIL, and also the other levies where it was decoupled from the VAT. Initially, when the VAT Act was introduced, these were brothers. Initially, the flat rate, the standard rate was introduced. Then the levies were added. When they were added, they were brothers. They were working together. At a point in time in 2018, government decided that they are going to decouple the levies from the VATs. And that decoupling, or that break in marriage was terrible. It was terrible to businesses. It was terrible to individuals, because businesses could not, as it were, enjoy credits, input credits for the levies elements in the VAT computation, which was quite terrible. So 2026 budget is going to abolish that mismarriage and will bring the levies together with the VAT to have a happy ever after story. COVID levy, long overdue. Nobody in Ghana ever liked COVID levy. Well, maybe let me speak to my sentiment. Maybe I don't like COVID levy. I'm sure you also don't like it. But thank God it's going to go for good. And extension of zero rating on locally supplied or manufactured textiles. This is also going to be extended. So the sunset clause on this will be extended to 2023. There have been several concerns, but be it as it is, I think it is good for that industry, especially when there is so many influx of undutied textile coming through several unauthorized places into the country. So this is welcoming news for the industry. And definitely there's going to be an abolition of VATs on reconnaissance and prospecting of minerals. So that is also good for those in the extractive and the mineral sector. There's going to be an effective VAT rate of 20% instead of 21.9%. We'll do a little demonstration on that and in the course of the presentation so that we could all have a good idea, a fair idea as to what that exactly means. Even though there have been concerns raised about the rate as it stands now at 20%, I think the finance minister is a right step that he has taken. Let's see how things goes, and let's see how government is going to intervene based on those concerns that have been raised by industry players and also taxpayers. The raising of the threshold of the VAT registration from 200,000 to 750,000 is also a milestone. It's a very significant move. Yes, but at a stance, in numeric value, you may think there may be there is so much huge jump, but if we look at it real value, probably the increase may not be as much as we are thinking. We'll touch on it also in the course of our presentation. Okay, so decoupling of the levies and from the VAT. As we speak now, this is what we have in our books. Okay, so if you go to the market, if you go out there to buy 100 cedi worth of item, a taxable item, be it a service or a good, this is the tax implication. Okay, so you are likely to pay NHIL. That's if the person is compliant, get fund of 2.5 and COVID levy of 1%. So if you put all this together, there is a tax base of 6 cedi plus the 100 cedis. That will be the actual cost of the item exclusive VAT. Okay, so as you can see here, the gross invoice amount is 100 Ghana cedi, and there is a new tax base higher than the 100 Ghana cedi, and that's what we are enduring up to today. Okay, and VAT rate of 15% will be slapped on the VAT base, which basically is tax upon tax. That's what the tax people call cascading tax. You paying tax upon the tax that you have already paid already. Okay, and that in layman's language is terrible. Okay, it's terrible, and that's what we have endured all this while. So at the end of the day, the effective VAT rates, that's the levies and the VATs, would be 21.9%. That's what is existing now. So if you buy something that costs 100 Ghana cedi, exclusive VAT, at the end of the day, what you part with is 121.9 cedi. Okay, and this is what we are expecting, or this is our understanding of what the finance minister is proposing: an effective rate of VAT and levies of 20%. So if that is the case, if you apply the NHIL, the get fund, on the exclusive VAT amount, of course, we know the COVID levy have been abolished. It will be abolished. Okay, so eventually, your tax base for VAT is not going to change. Okay, unlike where we have the tax base of VAT changing, including the levies. In this new proposal, or the budget is proposing that the tax base for the VAT will not change. It will still be the gross invoice amount, exclusive VAT, and thereby saving us another 0.9%, because the 1% COVID levy is gone. So the effective rate, instead of being 21.9%, is going to be 20%. And that is quite a good initiative. And let me caution, as it's all over in social media, it's not going to take an immediate effect. Definitely, there's going to be a first reading, second reading, and third reading of the bill. This is still a bill, it's not an act. So after it is passed by I guess Parliament, and it's assented to by the President, it is then after that this will take effect. So don't expect that when you go to the market now, you are going to pay a VAT effective rate of 20%. That is not going to happen until the bill is passed into law by Parliament. Okay. All right. So now let's look at the concerns about the VAT reform. Yes, one big concern is long overdue. It's long overdue. I don't know why we have endured this for since 2018. We have really done well. We have really done well. So this is really a big relief for both individuals and businesses. Okay. Now, the effective tax saving for household is 1.9% because of the abolition of the COVID levy, and also decoupling of the levies from the VAT rate. So it changes the VAT base of computation. So that automatically reduces. So it is expected that after from next year onwards, if you are going to buy anything in the market, you would have an effective reduction of 1.9%, at least 1.9%. Okay, and for businesses, it's not only for the for 1.9%. There's going to also be a relief of 5%, because we mentioned, if we go to the previous slide, we mentioned that in the past or currently, the 2.5% NHIL, the GET fund, including the almighty COVID levy, if you have an input credit, that is, if you purchase something from a VAT compliant vendor and you receive a legitimate VAT invoice, if you are a business, that tax credit, which is an input credit for the NHIL and GET fund and COVID levy that you have paid, you would not claim it. That is, you cannot claim it. For emphasis, you cannot claim it. You just waive it. You either absorb it in your business, or you pass it on in some other form to the customer. But now, that 5%, you can claim it. So that is a huge improvement in the cash flow of businesses. That is quite significant. 5% of your purchase value coming back into your business is quite huge. It's huge because of the things that we are seeing currently, where businessmen had to go through so many ordeal just to survive, just to pay salaries. So 5% is quite huge. But unfortunately, the budget was not so emphatic on flat rates. We are not too sure if this credit deductibility for the standard rate would also apply for the flat rates. You know, we have a flat rate regime of 3% and also for 5% for immovable property. So maybe the bill would have to come for Parliament to discuss before we can have a full appreciation of the impacts of these tax savings or VAT savings. Now, we're talking also about the threshold being increased from 200,000 to 750,000. Now, if you look at the exchange rates of the USD to Ghana cedi, as at the time it was introduced, as at the time the threshold, the new threshold was introduced, around 2015, December 2015, the exchange rate was approximately 3.9 to the USD. So the real figure, the real amount that we're talking about then will be around 51,000. Okay, now if we are considering the exchange rate, that's the US exchange rate to the Ghana cedi, we are talking about approximately 11 cedi now. So effectively, the real amount that we'll be talking about containing on is 68,000 thereabout. So the real difference would have been 10,000 after so many years, after 10 years, $10,000. That is the impact of the change. So if you look at it on the nominal value, that's the 200,000 and 750,000, there is a yawning gap. You may think, hey, how much? So much. It's about 550,000. But if you look at the real amount, it's about $10,000. Definitely, this process is going to ensure effective and efficient tax administration. Why am I saying that? Why should small backyard companies be compelled to register for VAT? VAT is a big deal. You're collating all your records and making sure that you take tax inputs and file it on a monthly basis. Some businesses don't even operate on a daily basis. Some is just somebody who is managing his own affairs. Record keeping is a big deal. So putting that a burden on these businesses, it's quite terrible. It will not make our tax administration effective. So this window is really going to make the tax administration, especially when it comes to VAT administration, very, very effective and efficient. Okay. Aside that, we're thinking that it will reduce tax administration costs. Yes. So GRA fueling their vehicle with human resource following after businesses who are making 200,000 per annum. Oh, whilst there are bigger vendors, bigger businesses that will bring more money to the government. So I think cutting off these small businesses will reduce the cost of GRA going about chasing taxpayers who are virtually doing nothing. It's also going to reduce taxpayer compliance costs. Okay, so if you know that your threshold is high and you know that GRA have now also forgotten about small businesses, they will go after you. So if you want to remain in business, nobody should tell you to comply. And the compliance costs for the GRA would also go down. It would also cause the compliance cost of businesses to also go down, because small businesses will not have to be compelled to register unless they want to do it voluntarily. Okay, and that brings into mind the next point, that voluntary compliance is also expected. So if you really need the GRA VAT certification for something, then you go and comply voluntarily. The sunset clause for the manufactured textile products, well, it's been extended again. Others have the view that, look, we put the laws in place. We can just put a clause that, look, this will be reviewed as and when the finance minister deemed necessary. So that would not be putting it always into the budget and then it has been reviewed, it has been reviewed. Just let's make one clause that, look, this will be reviewed as and when deemed necessary. That's it. So every year when the minister doesn't deem it necessary, no mention will be made of it, so that we can focus on the real issue. That's just concerns anyway raised. Now, there are also concerns that the 20% is still high. It's still high. And it has been put to the finance minister in so many platforms. It is still high. His defense is that, yes, let's hold on to it. If the level of compliance is very high, automatically government revenue would increase. And if what is coming into the kitty is so much, why not? Government would also look at avenues to reduce it further. Because just our next door neighbor, Nigeria is having a VAT rate of 7.5. That's why they always think that it's so expensive living in Ghana. Because in Nigeria, they pay only 7.5 VAT. Whilst we are grappling with 21.9, and now it's going to be 20%. Look at the yawning gap between. Very huge. Okay, so the standard of the cost of living in Ghana is quite high. And the effective VAT rate is probably one of the reasons. There may be other factors though, but this could be one of the culprits. Liberia is having an effective VAT rate of 12%. Equatorial Guinea, 15%. Mauritania, 16%. Our good neighbor, Cote d'Ivoire, 18%. So the minister would have to look into it again. And so that if there will be a further reduction, that will be great for businesses and also individuals like myself. Now, further to the reforms, there is going to be electronic and digital solution to improve tax collection in Ghana. That is a great news, great news. Deployment of AI, state-of-the-art technology, and now the world is going to that direction. So if you are a country and you are left behind in terms of digital application, especially in the collection of your tax, then it's going to be a big problem. It's good that we are going to introduce digital solution for tax collection. So we are going to monitor the various regimes, and also we're going to use this system also to collect on various platforms. Okay, and that sounds good. And it's not only for resident Ghanaians or resident individuals in Ghana. This is even expected to touch on non-resident individuals who are operating in the business space of Ghana. So that is great news. We also have the fiscal electronic device, which will be deployed and is going to be enhanced. That's the words of the finance minister. As to the extent of this enhancement, maybe we would have to cross our fingers and wait for the best deployment. And the VAT reward scheme to policing VAT revenue. So you'll be there, somebody, probably a mystery shopper, or somebody from GRA, or somebody just walking about. If you serve the person with a non-VAT invoice whilst your goods or your items are VATable or chargeable, taxable, then you have a problem. They are going to blow the whistle and GRA will be on your tail. There are concerns though about this digital transformation. Okay. Online businesses, well, some form of online businesses are paying tax already. So this is going to enhance it. That is great. And when you look at the full implementation of the physical electronic device, this was introduced as far back as 2018. And every year, politicians talk about it. Every year, politicians talk about it. Now we are talking about it again. So we don't know the extent to which it will be fully implemented. We are hoping that this will be done this time around so that the various leakages in the tax system will be comprehensively addressed. And we are also thinking that the VAT compliance in the country will be enhanced greatly if there are VAT rewards schemes for people who virtually, as we put it, go and chook others who are not complying with VAT rules. Okay, they are just going to hand you over to the law, and there will be a handsome reward. Who doesn't want this? So it's going to really boost the collection of VAT in that regard. We are hoping that government would make maximum use of that, and also the identity of these whistleblowers probably will be kept safe. Now let's also look at the review of core tax laws. The finance minister made it very clear that the Income Tax Act is going to be reviewed. It's going to have a major shakeup. Very, very important. Customs Act is also going to have a major shakeup. Excise duty is going to have a major shakeup. That sounds great. And these are all to align the laws. So these are our mother tax laws. Even though there are other subsidiary ones, these are the main mother tax laws. It's also to make sure that what we are doing in Ghana is in line with global best practices, so that we'll not be in a small corner and do what we think is best, but looking at others and learning healthily from them. Okay, and it's expected also that stakeholders will be engaged, and we hope that this will be a very strategic one for the review. Because if you talk about the income tax alone, for the past 10 years, there have been about over 11 amendments. So if you are a student and you are learning taxation, and this will be a big hurdle. At any point in time, there are amendments. At any point in time, so very soon you may even lose focus. You don't know which one is applying at what time. Okay, and those who are practicing, it's a big headache. It's a big headache. And if there is a slip on your side, it comes with negligence issues, and you can even go to the extent of being compelled to pay the liability because you give an advice based on an amended law. Okay, so if all this is going to be consolidated into one act and to be simplified, it's a great news. Okay, but we also think that it's not only about the consolidation. There are certain things in the act that should be re-looked at. A mention was made about capital allowance. The law puts a cap on capital allowance that will be enjoyed on motor vehicle at 75,000. And today, which car can we buy for our officials, our managers, which will cost 75,000? And that it will be a motorbike or something. Okay, but those vehicles will also come in to improve upon revenue collection, so that government will have enough to tax. So maybe those reviews should also consider some of these provisions. And the major one is the unrealized exchange gain. Yeah, so when you have an unrealized exchange loss, government says it's not deductible. That's fine. But unrealized gain, government is mute on it, which is not fair to businesses. So if there's going to be a major shakeup, probably these are some of the provisions that would have to be looked at. But I was also considering, yes, a major shakeup, a new act probably will be good. But we've had incidents where new acts came into being to replace existing ones, and I'm not too sure if we can say the impact was great, because we used to have the Internal Revenue Act. The Internal Revenue Act of 592 was primarily based on income that were generated in Ghana. So if you are a resident in Ghana and you generate income outside Ghana, you are not liable to pay tax on it unless you bring it to Ghana or it has a source in Ghana, then you'll be taxed. Then there was an introduction of the Income Tax Act 896. Okay, that focuses on your global income. So if you are a resident, a declared resident of Ghana, okay, be it a citizen or a foreigner, if you earn money in Ghana You also earn income in the US, and you earn income in Togo, you earn income from Nigeria. You are supposed to declare all those income in Ghana to be taxed. And if there is any tax credit, there is any evidence you paid taxes on those income in Nigeria, in Togo, and US, you would submit it, and that will be used as a tax credit. So that's what the law says. But as to whether our situation have improved, as to whether GRA has the mechanism, the technology to be tracking incomes of its residents at the global level, is also another thing. Okay, so it all boils down to technology. Yes, somebody will say, oh, there is an exchange of information platform, and there are so many, including the DTA. Yes, but have those platforms work effectively for the GRA to annex the various income of residents at the global level? It's another question that would be attended to. I'm not sure if we start with that, we can finish with our limited time. Okay, so this is a breakdown of our inflows, expected inflows. So we are expecting, if I say we, I mean the nation Ghana, which we are all part. We are expecting a revenue, a total revenue of 268.1 billion Ghana cedi. And that's primarily going to come from non-oil tax revenue, and also non-tax revenue that is non-oil, upstream oil and gas, other revenues, and then grants from our development partners. Okay, so basically a chunk of our revenue is going to come from our non-oil tax revenue. That's our direct and indirect tax. And this is how we are expected to expense this revenue. Okay, so don't forget, we are expected to collect 268.1 billion. And we are expected to spend 302.5 billion Ghana cedi. Right from the word go, there is a shortfall. So the finance minister would have to find ways to bridge the difference so that all these expenditures will be covered. Salaries alone to be paid next year is 90.8 billion Ghana cedi. And the interest on loans that we are going to pay, both locally and overseas, is 57.7 billion Ghana cedis. Goods and services that government will be buying will be 13.2. Grant to other government institutions. So there are other institutions that are on subventions, like SSNIT and the rest. They will be supported by government. ECG about 63.60 billion Ghana cedi. Other expenditures would also amount to 19.5. And we have the capital expenditure. So if you look at it, the interest that we'll be paying on our loan is synonymous to how much we are going to spend on capital expenditure, like roads, bridges, hospitals. And the amount that we are going to pay to ourselves as salaries as a country is far more than how much we are going to invest in infrastructure. Yes, that is the state of our economy. So some will say probably government sector is bloated. Employees are bloated over there. That is also another matter of discussion for another day. Okay. How is government going to sponsor this deficit? It's a mixed ball of other things. Okay, so government is expecting to get some monies from the IMF as well as the World Bank, and also some bilateral partners. But the Eurobond and the rest, they are putting a brake on it. They are trying as much as possible to spend less. But a chunk of it will be coming from our domestic market. And we are having a whopping 71 billion coming from government securities from the local funds, and a total of 6.6 billion coming from foreign sources. Now let's look at the budget deficit. The budget deficit talks about expected surplus. That's primary balance. So this is basically the deficit without interest of 75.5 billion. So if that is taken from the expenditure, we are expected to have primary balance of 1.5% of GDP, which is within the expectation of the law. Okay. Now, when we come to fiscal balance, that is the actual revenue as against expenditure, and that is also going to have a deficit of 2.2 as a percentage of GDP. And when we consider all the arrears that we have to take care of, then the deficit increases to 64.2 billion Ghana cedi. That is also approximately 4% of GDP. Okay. Now, these are all in line with the Public Financial Management Act as amended. Okay. This was actually amended because the original Fiscal Responsibility Act that restricts the expenditure of the state government. Okay, making sure that things that are spent on, okay, where we put our money should be in line with what we have budgeted, so that we have a clear finger on what we have to spend on at any point in time. Okay, so we'll do compensation when we have budgeted it. We pay interest when we have budgeted it. We pay goods and services when we have budgeted it. We give grant to other government institutions when there is a budget on it. And this is to compel the politicians to live within our means. Okay, these have been repealed, and the Public Financial Management Act have been amended to put in those clauses. And so far, so good. If the budget continues like this, and we are to follow through to it at the end of the year, that's end of 2026, then we'll be honoring this fiscal responsibility initiative. And we are also hoping that the Fiscal Council, as the minister mentioned, which is basically a watchdog over the Fiscal Responsibility Act that have been put in place. Okay, making sure that the power bearers, the politicians are disciplined enough when it comes to fiscal activities, and also living within our means to make sure that we consolidate the gains that we have in economic stability. Well, the independence of this council is also another thing. Yes, even though it is said to be an independent council, we are hoping that the influence of politicians will not be overbearing, so that they will be left alone to do their watchdog work. That is our concern anyway. All right, let's look at other reforms. We'll go through quickly. Government is expected to establish the value for money audit. That is also another good initiative. Yes, it has key objective, among others, to project economic justification and technical soundness of expenditure, ensure price inflation of national cost benchmark, and among others. These are some of the things that the VFMO is expected to do. Okay, now it is supposed to work hand in hand with the Public Procurement Authority, Internal Audit Agency, and Auditor General, including even the Finance Ministry itself and other related bodies. But it seems as if this is going to be another parallel office, another duplication by the politicians. For what reason? Well, if only they will keep to what they have been set up to do, and they focus on it, and there is a healthy relationship between this body and the existing financial management bodies, especially the Procurement Act, so that there wouldn't be a duplication of activity. And we see that in recent times. Some offices in Ghana saying they are not getting cooperation from another government agency in Ghana, and and you ask yourself, is it not the same country? Is it not the same states? And is it not the same institutions that are supposed to relate so that the lives of Ghanaians will be bettered? But it leaves much to be desired. So we are hoping that this office would not be just a ticking of the box, but it will really stand out to do exactly what it's been commissioned to do. And we're also hoping that there will be independent. It's ironical that their independence would be questioned if they are the very people who will be appointed by politicians. But that notwithstanding, we are hoping that their work will be insulated from the influence of the politician. Those are concerns, legitimate concerns that are there. And we also hear the designation of additional qualifying instrument for investment of resources of the Ghana Petroleum Fund. Okay, that's the GPFs. Yes, by law, the Petroleum Revenue Management Act 815 enjoins or empowers or states strictly that funds should be invested in low security portfolios, especially those from IMF, World Bank, and other safe sovereign nations. Yeah, the returns may be low, but the emphasis is there should be a low risk. Definitely, if the risks are high, the returns will be high. But we cannot play jackpots, as it were, with our petroleum revenue. So it is for a very good reason why this law was put in place. Now we are hearing that these funds will be channeled, a portion will be channeled into our energy infrastructure. That's great news, because it's supposed to transform the economy. It's not a bad news. It's a great news. But there is also a very good reason why this law was put in place, to safeguard our funds, petroleum funds, from the undue influence of politicians that may ruin the source of this revenue, because it's supposed to end. Petroleum revenue is not something that will be there forever. Okay, it's not a renewable resource. It will come to an end, and if it comes to an end, doesn't mean that our children unborn will not enjoy it. Yes, infrastructure, they may come to enjoy the infrastructure. That's good. But we've seen what has happened in recent times, especially in the power sector, ECG, and the related parties. We've been hearing what is going on in the news. So if this vital resource of ours is going to be put back into this power sector with all the drama, in quotes, the PDCs and co, we are all in this country. Would that not be a big risk? Then what happens to the Ghana Stabilization Fund? What happens to the Ghana Heritage Fund? These are structures that are to safeguard this oil revenue so that unborn generation would also one day come and enjoy these funds and say, yes, once ago, Ghana had revenue. Okay, so that's our concern. Public debt management initiative and reforms in 2026. That is also a good initiative. Government is going to prioritize cheap financing. Probably the Eurobond, the roadshow Eurobond and the Chinese bond and the Japanese bond and the rest. That's just on the lighter side. Probably would put a hold on it a bit, put the brakes on it, so that we prioritize cheaper financing sources for the country, so that we can halt the bleeding and consolidate the fiscal discipline and economic reforms that are being rolled out. So that is a welcoming news. That's a welcoming news. But as to whether it will continue like that till the end of the year is another thing. We have seen in the past politicians say one thing and they do another. We are hoping that the finance minister would hold his gun to this and make sure this completely is rolled out without any favor and fear. Okay, there are other reforms. Farmers are going to get a lot of interventions. Agricultural machinery, over 4,000 different machinery. That's good news. Our students are going to be fed by the Ghana rice. That's good. Our Ghana chicken, our Ghana maize, our Ghana eggs, which I hear we have a glut. But if we don't feed our children with it, who are we going to feed? Probably we should extend it to all government institutions. Okay, not only the schools. There are so many government institutions that rely on things like that. If we extend it to that, it will be good. Okay, and that's a good sign for farmers so that they can produce more. Okay, so that is a plus for the government. The almighty big push is on our hands again, and the Accra-Kumasi Expressway and other roads are going to receive maximum attention. That is really a big one there. We are hoping that government will get all the support that they can marshal so that this will come and see the light of day. Infrastructure deficit is really a big deal in Ghana. And if the president and the state is able to spearhead it to an appreciable level, I think it will boost so many aspects of our economy. The only concern is we're relying heavily on the GOG funding sources. That's the only concern. Going to rely on our budget funding, mineral royalties coming to government, and also development partner. But largely, we are going to rely on GOG funding. And we're hoping that the private sector would take an opportunity and also partner governments in so many of the infrastructure programs that have been rolled out. So this is the opportunity for businesses and also entrepreneurs and people who have enough money to spend to look into it for some opportunity. We continue with the other reforms. The GOG is going to have a sovereign drought insurance policy for farmers in the northern region, basically. Okay, and these flood-prone areas in the Accra metropolis, there's also going to be an insurance policy, and that is good news, so that people in these flood-prone areas may have some respite. Okay, that's good. It's a good initiative if you ask me. And also the Independent Tax Appeal Board. The finance minister made it clear that they are going to push for this to be fully rolled out. As to how it is going to be done is also another issue, because this is supposed to be a body that was supposed to be functioning since January 2023. The former finance minister, Ken Ofori-Atta, Honorable, commissioned even this 11-member board since 2023. 2023. And they have not even sat on one case. The idea is this body to attend to disputes between taxpayers and the GRA. So if there is any dispute, don't run straight away to court. This independent body, which serves as a more of a quasi-judicial body, will sit on the case and independently adjudicate so that everybody would receive fair hearing. And if you are satisfied, that ends the case. If you are not, then you can proceed to court. And these have been pending since 2023. We are hoping that this time around, the states will do something about it so that tax resolution and dispute issues would be attended to as and when it comes, because there are so many of them. Okay. And this idea of insurance too, it is good, but maybe we can extend it not only for northern farmers alone. We can also come to the middle belt and the southern sector. And the fraud-prone area insurance. We hope this will also be implemented in such a way that it will not encourage people to be living in waterways, because when it happens, they think, oh, government will come in with insurance policy to save them, and people will deliberately go and build in Ramsar sites. We hope that would not encourage that. Okay, so we could see that the budget is heavy on VAT. The budget is very heavy on new initiative. The budget is very heavy on fiscal policy and how to consolidate those gains going forward, and taking drastic steps so that our sins of the past, we don't repeat them. That will be great, so that we will manage our own affairs. Governments or the state has so many resources, human resources, infrastructure. We have so many things that we can leverage on to make this country a safe haven for all of us. Now, if you look at the areas of attention, the tax reforms, okay, it is likely that government may come up with tax incentives and rebates for agribusiness. Okay, so businessmen in that space, or people who want to venture into that space, they can be taking a closer look at this. Okay, it's very, very important, because government focus is coming to this. If there are going to be review of the laws, definitely incentives and rebates, especially for agribusiness, will be something that will be considered. So those who want to mechanize their farms, those who have the infrastructure to go into mechanization, irrigation, food processing, and storage infrastructure like silos and things, government will be looking at your direction. So businessmen, I will encourage to build up capacity for these endeavors. And also, the Customs Act is likely to be reviewed in 2026, 2027. And there are businesses like cosmetics and ammunition that are likely to have the excise duty stamp. So those in that space should look out for that. Okay. And also the 24-hour economy, that is going to be a big bang. So those who can partner the government in those aspects, probably you get closer to the government, and let's see what they have on the drawing board. Then where you can meet them halfway, definitely it is going to be a big plus. VAT compliance going forward, businesses that are eligible for VAT, I think we have to take it very serious, because going forward, there's going to be a big harvest. And if you put yourself in that limelight, you'll be harvested. You will definitely be harvested. So let us tread cautiously as businesses, as individuals, so that we help this country, the only country that we have, to grow in bounds and in leaps. Okay. Well, I think that will be the end of this presentation. And Honorable Moderator, Esquire, I'm putting it to you and handing it over to you.
Okay, Mr. Doche, thank you so much for such an insightful presentation. I've learned a lot, and I'm sure the participants have also learned a lot. Our time is fast spent, but we have some questions that we are hoping that you can address to give more clarification. So, the first question is that what timelines should businesses expect for implementation of the new tax measures? What timelines should businesses expect for implementation of the new tax measures?
Okay, thank you so much, Senior Counsel. Well, it's common to our laws, as I mentioned earlier, our constitution, that bills of this nature had to be passed by our parliament. So even though these have been read, it will not take effect immediately. Parliament is expected to pass it. Then the president will assent it. Then it will be an act, and it will be rolled out after that.
Okay.
So we are looking at maybe somewhere in January. Yeah.
All right. Okay. So the next question is, which new tax regulations will have the biggest impact on businesses in 2026?
2026?
Yes. The person wants to know, amongst all the new tax regulations that are being introduced, which of them would have the biggest impact on businesses next year?
Okay, so it's so obvious. This budget is a VAT budget, as promised by the finance minister in the previous budget. He promised that there was going to be a consultation both to the IMF and other stakeholders locally. And after that consultation, this is what we have. Okay, there are so many reforms when it comes to VAT. They are going to decouple the levy. They are going to abolish the decoupling of the levies from the VAT standard. Okay, VAT, when it comes to COVID, it is completely abolished. That's a great news. It's a huge relief to businesses. And those in the textile industry, there's going to be an extension of their zero rating VAT. Okay. And then when it comes to those in the extractive sector, okay, there's going to be an abolition of VAT on their prospecting and reconnaissance activities. Okay. And also there is going to be an effective VAT rate reduction from 21.9% to 20%. And the biggest of all is there's going to be an input tax annexing by businesses on all the levies. On all the levies. That to me is the biggest. We are talking about whopping 5% of invoice amounts. That's quite huge.
Yeah.
Okay, so that's what businesses are going to benefit from. And aside that, I think the big push and other reforms in terms of reliefs would also benefit business. But the chunk of it will be the VAT environment.
Okay. All right. There's another question here, and it reads that even though some reputable advisory firms have noted the evident advantage of reducing the effective tax rates, let me take it again. Even though some reputable advisory firms have noted that the evident advantage of reducing the effective tax rate eases the burden on businesses, what are the long-term challenges that could be faced by the government and the likely ways to control them? Is it okay, or should I
Yes.
take it again?
Yes, I think it's clear.
Okay.
Yes, it is true. This is going to be a big relief for businesses, but definitely government would also be having the short end of the stick. Okay, so those were supposed to be inflows to the government, but government is going to lose all those things. But the hope is that this would encourage voluntary compliance, and also the measures that government is going to put in place, VAT rewarding schemes, those who are going to police the VAT collection. So we are hoping that all those, if they come into the chemistry, it would encourage compliance. You will be compelled to comply. So if you don't want to comply, you'll be compelled. Somebody will come and trick you, as we say, and you'll be compelled.
Okay. Okay, I think that is clear. So another question here is, with a vast increase in VAT threshold from 200,000 to 750,000, what implication does it have on both large and small scale industries, especially with some large scale companies outsourcing some of their products from small scale companies, like in the case of companies like Nestle, who outsource packaging materials to SMEs?
Okay. Well, even though the minister has increased the nominal value, which is the threshold, that doesn't stop voluntary registration. So if you are a small business and your turnover is even 100,000, you can still apply for VAT registration. The law doesn't stop you. So I mentioned it, even if the nature of your business or your business model is said that you deal with bigger players in the industry, and they will have to lift your wares, and because of that, they will be requesting for VAT invoice. Then you have no option than to apply, and GRA will not deny you, even though you are below the threshold.
Okay.
So
Okay.
that could be done.
Okay. Thank you for the clarification. So someone else wants to know, will the VAT exception apply only to pre-production exploration, or will it cover early stage development activities as well?
Okay, so when it comes to companies in the mineral or extractive sector, and also the mining sector, there is already an exemption regime for VAT for them. Okay, so if you have a dredging equipment, there is an exemption. So provided the equipment that you are bringing is within that list in that regime, yes, you'll be granted, because the minister was very silent when it comes to equipment. It just talks about their activity that will be exempted. So, but already there is a regime for exemption for mining equipment and also dredging equipment.
Okay. Okay. And then also, does the VAT exemption on mineral exploration extend to imported exploration equipment, or is it strictly for local purchases?
Okay, so I think that's what I
Yes,
mentioned.
you've touched
And there
on
is
it.
a regime for exemption. So most of these equipment, we know that we import them. Okay, we import them. So if your equipment is within the list of exempted items, then definitely you enjoy it, because the minister was again silent when it comes to importation, probably because there is an existing regime, okay, for exemption when it comes to those kind of equipment.
Okay. There are so many questions. We'll take just about 2 more, and then we can be done. So there's this question. The person is saying that, what is your perspective of tax planning? Should you play it safe? Example, me deciding to pay withholding tax, even if the amount is less than 2,000, and will not be able to check how cumulative it goes.
Okay, so the first thing to say when it comes to tax compliance, tax planning, is to be compliant. That's the first thing. So look within yourself. This is self-introspection. If you want to plan your tax, the first thing that should come into your mind, not dodgy, be compliant. And if you are compliant, you will not have issues with GRA. If you are compliant, you don't have to hide. If you are compliant, you don't have to, as it were, use unorthodox means to get out of the tax nets. Okay, so that's the first thing. And when it comes to withholding tax, definitely the threshold is 2,000. But that 2,000 is not on a single transaction. It is on aggregated transactions as well. So a particular transaction may cost 100, 200, 500. It's not up to the threshold. Yeah, so you may not withhold. So the question is, that vendor that you bought that item below the threshold, are you going to use that same vendor over the years or within that year more than that number of times that you have dealt him? So if you put all together and it is 2,000, then the law requires that you withhold. So it's up to you. If you know that you are going to do a lot of business with that vendor, like a mechanic who is repairing your car, if you know that that is your dedicated mechanic, then definitely you'll be dealing with him throughout the year. Unless maybe you're having a brand new car. Even brand new cars have to be serviced within a short time. So definitely you will be needing your mechanic.
Okay. Some of the questions were addressed during the presentation, but so we'll take just the last one. It says that talking about the tax adjudication board, it said, I've heard there will be a tax adjudication board that will handle tax issues. How will it operate and how is it different from a court of law? I think you touched on it a bit. If you can just mention it again for the person.
Yes, it's true. So that's the Independent Tax Appeals Board. So I mentioned that this has been in place for a very long time. Actually, our former Honorable inaugurated even the 11-member board. Okay, so this has been done, but its implementation is what is delaying. But the Minister of Finance, when he read the budget, says they are going to fully roll it out. They are going to fully implement it. So we are hoping that that quasi-judicial body will come into effect so that it will be an alternative dispute resolution when it comes to tax issues between the taxpayers and the GRA.
Okay. Thank you so much, Mr. Doche. This was indeed very, very, very educative. I've learned a lot. If I didn't hear anything at all, at least I know that all the 11 amendments of the tax law will be consolidated and reviewed and simplified, because it was indeed a headache in taxation, honestly. So thank you so much. I know that some of us have other questions and maybe clarification that we may need. We are available. You can send us an email and your questions will be addressed. The presentation will also be shared on social media platforms so that you can always watch them. You can always watch it again to go over anything that you want to hear again or you want to learn again. We want to express gratitude to the Tax and Accounting Department for organizing this webinar. and also by extension to Firmus Advisory for this insightful webinar. Thank you also, our dear participants, for joining us. We hope you indeed learned a lot. We are going to be organizing more webinars and other programs, so please stay tuned and join us whenever you hear of them. Thank you so much for joining us.
Limited is a consulting firm established in 2013 based in Accra, Ghana, where we provide 3 core services. Number 1 being regulatory compliance, 2 is market research, and trade development. Our regulatory compliance division is a division where we basically take care of a company that is expanding here into Ghana. We provide core services from company formation, immigration-related services, company secretarial, as well as other key licenses that are required for every new business that is expanded into Ghana. Here at Firmus, what we've sought to do basically is to bring under one roof all the key services that you need. And really, our strength and our unique selling proposition is the fact that with us, you don't have to move from agency to agency to get your issues sorted. With us, you're able to have subject matter expert who can speak to tax, who can speak to immigration, who can speak to company registration, and will take care of your company and provide you solutions that help you have the peace of mind to work and to start your business here in Ghana.
So our research and trade development services focuses on providing insights as well as market analysis for existing companies as well as companies that are looking to invest in Ghana. For trade development, we focus on connecting markets. So if you're a Ghanaian company looking for a potential partner outside the country, we do assist in securing those partnerships. If you're a foreign company looking for a local company to partner, we do provide due diligence services, among others, and connect you to those companies. We don't only focus on foreign companies that are looking to invest in Ghana, we also focus on Ghanaian companies that are looking to expand and better understand the market. We have a host of industry experts that help you understand that.
We work for a number of brands in Ghana as well as global. We work for brands like ABSA, formerly Barclays Bank. We work for International SOS. We work for Honda, we work for Jetro, and a whole host of other firms, and we have clients in Ghana and across the globe. So we are happy to extend our services to you as well and to serve you. Our name is Firmus, which simply means reliable in Latin, and we are simply inspired to deliver value.
Registering your business in Nigeria can be a hassle. Even though the CAC platform allows you to register your business online, however, not anybody at all can do that. First, you need a CAC accredited agent. You have to go through a whole lot of documents online to get all that done. You are worried about your business name, which type of business you should be registering. All this can be very messy, and that is where we come in with our value. Firmus Advisory, operating from Lagos, Nigeria, helps you with all your CAC matters, from choosing a business name to choosing the type of business that you should be registering, to formulating your business object, company secretarial, and all these matters. Our expert team in Lagos will help you to get all that sorted. We provide full-fledged CAC registration support for your business registration with very fast delivery and also competitive pricing. Reach out to our legal team in Lagos and we'll be happy to add value to your business and help you to grow.
When starting a company in Ghana, legal due diligence is critical to ensure compliance and to mitigate risks. Firstly, it is crucial for a foreign investor to have a contract drafted when entering into partnership with a Ghanaian. This ensures legal clarity and safeguards or protects the foreign investor. Ghana's legal system has specific requirements and nuances that may not be familiar to the foreign parties. It is important that the contract aligns with local laws, protects the investor's interests, and clearly defines each party's rights and responsibilities. This prevents disputes, safeguards investments, regulations, giving the partnership a solid legal foundation for success. Corporate governance is equally important. The Companies Act 992 mandates companies to have at least 2 directors, a shareholder, an auditor, and a company secretary. The shareholding structure must be clearly defined, including the rights and responsibilities of shareholders. Regular board meetings, adherence to fiduciary duties, and maintaining accurate records of resolutions are key to ensuring and running a company that is transparent and compliant.
Firmus Advisory Limited is a consulting firm established in 2013 based in Accra, Ghana, where we provide 3 core services. Number 1 being regulatory compliance, 2 is market research, and trade development. Our regulatory compliance division is a division where we basically take care of a company that is expanding here into Ghana. We provide core services from company formation, immigration-related services, company secretarial, as well as other key licenses that are required for every new business that is expanded into Ghana. Here at Firmus, what we've sought to do basically is to bring under one roof all the key services that you need. And really, our strength and our unique selling proposition is the fact that with us, you don't have to move from agency to agency to get your issues sorted. With us, you're able to have subject matter expert who can speak to tax, who can speak to immigration, who can speak to company registration, and will take care of your company and provide you solutions that help you have the peace of mind to work and to start your business here in Ghana.
So our research and trade development services focuses on providing insights as well as market analysis for existing companies as well as companies that are looking to invest in Ghana. For trade development, we focus on connecting markets. So if you're a Ghanaian company looking for a potential partner outside the country, we do assist in securing those partnerships. If you're a foreign company looking for a local company to partner, we do provide due diligence services, among others, and connect you to those companies. We don't only focus on foreign companies that are looking to invest in Ghana, we also focus on Ghanaian companies that are looking to expand and better understand the market. We have a host of industry experts that help
a number of brands in Ghana as well as global. We work for brands like ABSA, formerly Barclays Bank. We work for International SOS. We work for Honda, we work for Jetro, and a whole host of other firms, and we have clients in Ghana and across the globe. So we are happy to extend our services to you as well and to serve you. Our name is Firmus, which simply means reliable in Latin, and we are simply inspired to deliver value.
Registering your business in Nigeria can be a hassle. Even though the CAC platform allows you to register your business online, however, not anybody at all can do that. First, you need a CAC accredited agent. You have to go through a whole lot of documents online to get all that done. You are worried about your business name, which type of business you should be registering. All this can be very messy, and that is where we come in with our value. Firmus Advisory, operating from Lagos, Nigeria, helps you with all your CAC matters, from choosing a business name to choosing the type of business that you should be registering to formulating your business object, company secretarial, and all these matters. Our expert team in Lagos will help you to get all that sorted. We provide full-fledged CAC registration support for your business registration with very fast delivery and also competitive pricing. Reach out to our legal team in Lagos and we'll be happy to add value to your business and help you to grow.
When starting a company in Ghana, legal due diligence is critical to ensure compliance and to mitigate risks. Firstly, it is crucial for a foreign investor to have a contract drafted when entering into partnership with a Ghanaian. This ensures legal clarity and safeguards or protects the foreign investor. Ghana's legal systems has specific requirements and nuances that may not be familiar to the foreign parties. It is important that the contract aligns with local laws, protects the investor's interests, and clearly defines each party's rights and responsibilities. This prevents disputes, safeguards investments, and ensures compliance with Ghanaian regulations, giving the partnership a solid legal foundation for success. Corporate governance is equally important. The Companies Act 992 mandates companies to have at least 2 directors, a shareholder, an auditor, and a company secretary. The shareholding structure must be clearly defined, including the rights and responsibilities of shareholders. Regular board meetings, adherence to fiduciary duties, and maintaining accurate records of resolutions are key to ensuring and running a company that is transparent and compliant.
Firmus Advisory Limited is a consulting firm established in 2013 based in Accra, Ghana, where we provide 3 core services. Number 1 being regulatory compliance, 2 is market research, and trade development. Our regulatory compliance division